let's get started. Let's rock and roll. How does this thing work? There we go. All right. Sorry for the little bit of a late start. We had a little technical difficulties. I got in, I had everything set up, I was ready to go, and there was no start button. So I had to go back out, start all over again. I don't know. Don't ask me. I don't know. All right. Glad to be here though. Wednesday afternoon, 1 hour before the market's going to close. We're going to see if we can't, make a few trades, make a little bit of money. We're going to do a little scalp and trail. But before we do that, I think we ought to review the markets just a little bit. What do you think? This is the S&P 500, and then I'm going to go through and I'm going to kind of show you a little bit about how to set up your portfolio so you can do a little bit of this day trading stuff yourself, make it easier on you. All right. I just always want to make it easier on you. And that's the whole name of the game, make it easier on you. All right. First thing we want to do is this is the S&P 500. This is the granddaddy of all markets, of all charts. All right. This is the canary in the coal mine. What this thing does is kind of the backbone of the stock market. So if we just take it and look at it from a very simple point of view, let's come in here. Let's see what these are. We got 50, 200, and 100. Let's turn off the 100. Let's turn off the 50. We'll just leave on the 200 for right now. And we got VWAP on. We got, that's all. That's good. That's all we want. Just the one for right now. Just the 200 period moving average. All right. So right now what we're looking at is this is the 200 period moving average. You can see the market just broke above it. We got a previous high right in here. We got a nice little two drive pattern down, A, B, C, D, right? A, B, C, D, land, A, B, C, D, just like this, just like this, just like this. The only thing that confused us a little bit is how fast it dropped right down here in the last, right? It was kind of a big drop. I know some people got a little concerning there, but it came right back down to the Fibonacci golden ratio. We always talk about 130.9 being the golden ratio. Now 68.2, 61.8 is also a golden ratio, but that's on the retracement side. This is on the projection side. All right, there's a difference. How far up do you think it's going to go? Well, 130.9 is the golden ratio to the upside on using the Fibonacci sequence. But once it goes up there and turns around and comes back down, how far is it going to come? Well, the golden ratio is 61.8 on the way back down. So you have a projection and a retracement. All right. They're symbiotic. They're like yin and yang. All right. You got to have one. You can't have one without the other. You got to have them both. All right. So here we go. 130.9 on the downside, 61.8 on the upside. Now, of course, to get to the downside, 130.9, it has to pass through 61.8. So just like that. And that's where it, did you like that sound effect? Just like that. That's what the market did. It did one of those. So here we are coming down to 90, 100%. And then notice that's where the tails end, but we hit 130.9 down here and we kind of broke that a couple of times. This is on the daily chart. So we had a couple of days of poke through that little 130.9, but then we made a nice little ABC pattern here coming back up. So we just go like this little ABC pattern here, and we're going to dance around with this little piece here. Of course, we could put it at the low, but the market didn't rally back up as fast as it fell. It fell really fast. Now it's rallying really fast. It's coming back up, and we got to kind of line this up with where it's going and stay at the right price level. So this is how my instructor did it at the board of trade. I never did like he when he did this, but he played with it like this. He kind of massaged it. But that's how we go. So this is the low, and all I did is just strung this back over here a little bit, and then up here, and then up like that. So we're right here at, look, 130.9. Oh my gosh. Look at how the math works. And you try to tell me these markets are not controlled by computers and logarithmic algorithms? No, of course they are. Of course they are. Okay, Len, if you're so damn smart, how far is it going to come back down before it goes back up again? Because it is obviously coming back down right here, right? 130.9. It touched it like a train on rails. Where would it come back down to? Well, that's an easy calculation. All we do is do the one standard deviation, right? So we come in here, and I'm going to go off of this C point right here, one standard deviation. That would put this market, if it follows the train on rails, right back down into here. So this is where we'd expect this market to go. Now, what is the media going to do if the market falls back down to this level somewhere down in here? Now, the first level is 38.2. So it could just fall down to 38.2 and then start to go back up. That's very common. But usually, if it just falls to 38.2 and goes back up, that oftentimes gives us a little ABC pattern and it comes back down again. Okay. If it goes a little deeper, if it comes back down a little bit deeper, gives us a little ABC. That's not quite so much. And then 61.8. And then we get a little retracement and it starts headed back up again. But nobody knows. All right. Well, all we can do is play the probabilities of this market. So gird up your loins and get ready and plan on seeing this market back down into this region here. All right. So if we come in here and draw our trend lines, we're just going to draw a natural little trend line. Where's it going to go? It's going to go right up underneath those flat bottoms. And you can see in here kind of a rough little march higher, but we're going to bring that all the way down here. And so that ends up being with your almost like your three little mountains. All right. So mountain one comes in here. We get mountain two in here. And now we're at mountain three in there. So that's your three drive pattern. Ooh, that's an ugly little mountain. Try again, Lan. Just like that. All right. So that's kind of our three little mountain drive. So we got our three mountains, drive one, drive two, drive three within the one longer mountain. So this is the first drive. This is the A drive. All right. So A drive. One big long drive. Inside the one big long drive, we have three smaller drives. So this is all planned out. It's all planned out. All right. So now we anticipate that this is one standard deviation, two standard deviations, three standard deviations. That's what that is. And then when you start at the bottom, now I know I didn't put it all the way to the bottom over here. If I did, it was a bigger drop. And I don't want to see the market fall all the way down to here. But okay. I fudged it a little. All right. So we're going to see the market probably fall back down into this region here. And what is the media going to do? It's all Donald Trump's fault. Oh, the tariffs are getting ready to come off. That's why the market's falling. It's just math, people. It's just math. I can't wait for you to read Pitt News Magazine. Pitt News Magazine has an article in here. Speaking of Pitt News Magazine, have you heard what Elon Musk said about Pitt News?
Yeah, of course. I have a lot of subscriptions for magazines. My most recent subscription, I picked up a lifetime subscription to Pitt News Magazine as an example, among others as well.
Yeah, among others as well.
Yeah, when I heard Elon talking about Pitt News Magazine, I called in and got a lifetime subscription myself, of course.
Of course he did. Of course. All the cool kids have Pitt News Magazine. Do you have Pitt News Magazine? Of course. Of course you do, because you're one of the cool kids. All right. So here we come. And we would never use AI to get celebrity endorsements. Never do it. All right. So this is where we anticipate this market coming back down to. And if it does that, it comes back down into here somewhere. So you could sell out right here. If you're in the S&P or if in your markets, you could sell out right here and start reaccumulating down in here. All right. As the market comes down through these different locations. So we sell out on the way up, we sell out, we're all out, and then we start to buy back in. Now, it hasn't broke the blue lights yet. So we are preempting this a little bit soon. It could still go up and make a fourth drive. It's down here breaking the natural trend line, but the mathematical trend line is still intact. So just like in Palantir, Palantir made three drives, but Palantir didn't break the blue lights when I thought it was going to, right? It went one more drive. Well, it got the three drives. I just counted them wrong. Hindsight's 2020. I know. You can see all this stuff in hindsight. So there's the chance that this could be a A4, right? An A4. It's very unlikely. All right. You got A1, A2, A3, and A4 would mean that we'd get another little mountain in here. Doesn't mean you can't, certainly can. It's just going to be really super rare. It'd come up to 161.8 up in this region here to get us up beyond 130.9 to 161.8. It can even do one more. It could even do one more and go from 161 up to 200. That's just superty duperty rare. All right. That would be an A4 here, and we'd end up with an A5 here. That's really rare. Those are so rare. All right. But it could do it. It's just really rare. So that's all I'm saying. That's all we're saying. We got this previous high right here. If we take this previous high and we draw a trend line right across that previous high, look how it busted through that previous high. And now it's coming back down using it as support. That's common. Markets oftentimes will break above a previous high, come back down, use it as support, and then take off and run once again. And it might take off and go from there. No one knows. All right. No one knows. It's got to break those blue lights, though. It's got to break those blue lights and flush back down. So there's our three little fluffs right in there, three little mountains. This is where I expect it to come to. All right. That's just the S&P 500. Now, I want to go down and do some day trading. That's what we're here for. Just let you know that's how I'm analyzing this market. You can see down here in the indicators, it's pretty obvious in the indicators too that that's where we're at. This is the accumulation stage right here. This is where you buy in, right? This is where you buy in. And then this is where you sell out, okay? Where you sell out. So you get in here, you accumulate here, buy low, sell high, sell high. We're high, let's sell out, all right? Sell high. Now, there's lots of different strategies out there, and I know some of you are holding the yield max funds, and you come to this market and you're like, we talked about this yesterday, and if you didn't see that video, very important video where we covered all that stuff in yesterday's video, I highly recommend you go watch that video. Very important on the yield max stuff for the longer term trends on how you sell out, whether you don't, how you cover yourself, how you use your dividends to cover your parity, all that kind of neat stuff. It's all covered over there, so I'm not going to talk about it today, all right? And then we'll follow up with the UBI stuff tomorrow morning in our morning session. All right. We have Tuesday morning, Wednesday afternoons, and Thursday mornings, 3 days in a row in the middle of the week. This is summer school, right? Remember, we're in summer school. When school starts up again, we'll go back to every single day. But right now we're having summer school. And so I wanted to show you in Track and Trade. If you guys have Track and Trade and you want to set up your portfolio, I'm going to show you how to do that. Now, I've gone through and opened up just the S&P 500. Okay, we got the S&P 500. This is the daily chart. That's the one we've been looking at. This is the a 1 minute chart because we want to be doing a little day trading. We can do day trading on the 1 minute chart, or we can go down to, I have in here a range bar 25 chart. Okay, so that makes it a little smaller, or more bars really is all it's doing. It's adding in more bars less than 1 minute. Okay, so you go back to 1 minute, you can see these, we got 3 bars off of that rejection, and then we come to 25, and we've already got the 3 bars, and then we're coming in here. So it's a little bit different. All right, 25 range 25 versus 1 minute. Yeah, that is what it is. This is this bar coming down. Is that what's happening there? Kind of hard to tell. I guess that 1 minute. That's clear back here, I think. See this big long drop back here on the 1 minute chart? That's all this big long drop back here, probably. I don't know. So we'll come in here. We're going to trade the 20 to the range 25 though. But I want to show you how to open up your portfolio. So we create a portfolio, and just by opening up a first chart. All right. So we opened up our first chart, and that puts it into a portfolio. So you can name that portfolio. We're going to call it our day trading portfolio, right? Day trade portfolio. Can you spell land? New. Okay, so we're going to leave that like that. We don't want a new one. We want this one. Now what we're going to do is we got this S&P in this day trading portfolio, but we want to add more charts to it. So now we just come down here and we come in and we want to put in the NASDAQ because we like to trade the NASDAQ too. Now the NASDAQ's got a mini and a micro. Well, so does the Russell. We can trade any of the minis. We can trade the micros. But when we trade the NASDAQ, I kind of like to trade the micros. They're kind of fun to trade in the NASDAQ. NASDAQ's a big market. You can make a lot of money. You can lose a lot of money at the same time. So if you trade the micros, then you can be a little bit more aggressive and not lose as much if you're wrong. So we're going to come down and do the same thing. We got our daily chart in here. We're going to open up range 25, and we're going to open up a 1 minute. So we got the 3 same charts in here, and that's what the NASDAQ's doing on a 1 minute time frame. Now it's coming down, making a nice little ABC pattern, just like that, right down to 100%, just like a train on rails. And now we're back in here. We go back to the range 25, and that's what that little ABC pattern looks like on there. Yeah, so this little thing right here is this big thing right here. All right, that's how many bars you get on 25, range bar 25. So it's moving pretty good. It's huffing and puffing. Looks like it wants to go down some more. Land, jump in, jump in. Well, we could, but I just wasn't ready. Let's go in and do some more of this stuff. So now let's say that we want to create another portfolio. All right. You'll notice in here, this is a new book. So actually I have no book. So I'm going to come in here and I'm going to open up a new portfolio. So I'm going to hit new and I'm going to say, this is my day trading number 2 portfolio. All right, number 2 portfolio. So I got to come in here and say, okay, now I got a new portfolio. And you see in here, I got 2 portfolios. I got a day trading portfolio and I got a day trading number 2 portfolio because that's what we named them. So we come into day trading 2 portfolio, it's empty. And in here, we're going to put the Dow. So if we come down to the Dow and we got a mini Dow and we open that one up, right? And then we come down, what's the other one? Russell. Let's put the Russell together. We'll just do mini Russell and we open that one up. Now we got the Dow and we got the Russell in day trading portfolio number 2. And if we want to go back to the day trading portfolio, that one there is the NASDAQ and the S&P. Now we can change this one. We'll change the name. We'll come in here and this is day trade number 1. All right. So they look the same. Day trade 1, day trade 2. Oh, look, this one says day trading. That's okay. All right, we can name them whatever we want, but now we have day trade 1 that has NASDAQ and S&P. Why don't we even say that? We'll come in here and we'll go like this. We'll say NASDAQ, all right, and S&P. How's that? So now we have them right in the name. So now we can come down here and we can go to number 2 and we're going to take out the trading while we're here. We're going to make them all the same. And this one, we're going to go colon, just like that. And we're going to say Dow and Russell. Russ, you got to have 2 S's, Land. Oh, Russell. Okay, so now we have day trading 1, day trading 2, day trading 1, day trading 2. So if we want to trade the NASDAQ and the S&P, we can go to this one. If we want to go and trade the Dow and the Russell, we go to this one. All right, so that's how we can use the portfolios. And you got, all of your charts. You don't have to go back and forth through charts, or you don't have to have a whole list of charts. You can have just the ones you want in your portfolios, and then you can just flip back and forth, and they're all set up for you, and they don't lose all your settings. So now in here, you can set up all your settings, and then whenever you go to the chart, it's just going to go to the chart, or you can flip to the portfolio, and all of your stuff is saved in there. See, all my drawings are all saved in here. Isn't that cool? All right, so that's how portfolios work. And you have to turn them on up here in track and trade. Let me make this a little bigger here. You have to turn them on in track and trade. Up here on the right, you have to click this little button that says portfolio. Otherwise, this thing goes away, just to simplify the user interface. But that turns on portfolios. That was confusing to some people. So we said, well, you can turn it off if it confuses you. So I wanted to kind of show you how this all works. All right, now what's this one here? Future spreads. Well, that's if you want to trade spreads, you can now get another portfolio for spreads. But that's beyond the scope of today's class. We're just going to talk about this. All right. So now the reason you might want to do that is so that you don't have so many charts in one book, because you might want to come in here and you might want to, let's eliminate the 1 minutes. All right, we're going to delete the 1 minute chart, and I'm going to come to this one. I'm going to delete the 1 minute chart, and now we just have 4 charts. Now I can come in here and I can put 4 charts on the screen at once. Grab the header and move that up into its spot, and there you go. Now I have 4 charts on the screen. That's pretty cool, right? I can have 4 charts on the screen, and then I can go back over here to the Dow and the Russell, and I can have, well, now I got 2 charts on the screen for them because that's all we opened up. I can open up one more. Let's open up a 1 minute chart and a 1 minute chart. And now I got 4 charts on the screen. So if I had to try and sit there and have all 4 indexes with multiple charts on the screen simultaneously, and I tried to go to a multiple chart, I would end up with like 10 charts on the screen, and then everything's so small you can't see it anyway. So that's why you use your portfolio to create these different views of different charts. You can pair them together, or you can just have all in one. You can come in here and you can say, I want a new one just of the S&P. Let's just do NASDAQ, NASDAQ. All right. And we're going to go ahead and we're just going to have a NASDAQ one. Now we're going to come into NASDAQ and we're going to go to let's just do mini NASDAQ. We'll open it up. So we now have the mini NASDAQ. We got the daily. We can come down and we can put a 1 minute chart. We can put a range 25 chart, and we can put a range 50 chart. Now we got 4 charts, so we can put them all on the screen at once. And look at that. We got 4 NASDAQ charts all in one portfolio. And I can bring this one here. This one doesn't have, I'm going to bring it full screen so I can put on Heiken-Ashi because it's a toggle. And it would, if I wanted to turn that one on, it would turn all 3 of these off because they already have. See, watch this. I can turn them on and I can turn them off. That's Heiken-Ashi. Heiken-Ashi is what smooths these components out. It's kind of the cheat codes. All right, so this is the daily chart. This is the range 25. This is the 1 minute. Let's put these two up here. Let's put the 1 minute up here with the other long-term chart. Sorry, 1 2 minute chart is the long-term chart. And then we have, let's put the 50 over here. And then this is the 25. So now we can see all 4 views of the NASDAQ chart all on the screen at one time. And that's how you do that. So you come in here and you have the NASDAQ all on the screen at once. That's pretty cool, right? That's pretty cool. You got to admit that's pretty cool. All right, so we can look at the trend up here. The 1 minute chart, the trend is still down, but we're getting a little pullback in here. Well, if the trend is still down, let's see, let's measure it. We can come in here with our little measuring tool. We can go, hey, we're going to come in here with an ABC pattern. And it came down to 61.8, just like a train on rails, started to bounce back up. And so we can come in here now and we can say, well, if that market turns and starts to go back down, but breaks those yellow dots, gives me another arrow to the downside, I can take a short position just like that. I just go short right there, just like that. Now, if I'd have used this button instead of that button, I'd have a stop right there, but I don't. So I'm going to come in and drop a stop in there by myself. I can put it right on the yellow dot if I want, or I can put it way up here. I can put it way up here and then right click on it, say edit, and tell it I want it to trail the ATR, say okay. And it drops down to that little yellow dot and it'll just trail down behind it. And we can make a little bit of money if the market continues to fall. If it doesn't, we get stopped out, take a tiny little loss. All right, that's the name of the game. Cut your losers short, let your winners run. That's how you trade. That's all there is to it. Don't make it more complicated than it has to be. We're just trying to pick direction. That's all we have to do. And then if we're wrong, we just get right back out. And the problem is that if sometimes the market's lazy and it just goes back and forth through little tiny snaky patterns like that, you get in and it stops you out, and you get in, it stops you out, and you get in, it stops you out, and it doesn't ever go far enough to make any money. Well, if that's the case, you have to be smart enough to know not to trade anymore. Stop trading. So, well, this is being kind of quiet right now. Let's see if it'll heat up a little bit. You can sit here and wait for it to heat up a little bit. You can say, well, Land, it's going to go back down again. Okay, well, hit your little button in there and get back in again if you think it's going to go down. But, you know, don't over trade. That's the problem with most traders is they don't wait for a perfect setup. They over trade. But you want to put your positions in when you got a low probability of failure. So if it does fail, you can get out really fast. Sometimes you get in when a market is a long ways away from your stop location or from those little yellow dots. The little yellow dots are way up here. And that's a hard time to get in because the market can move a long ways before it stops you out. But if the market looks like it's going to go and those little dots are close, you can get in, you're stopped beyond that little yellow dot. And if you're wrong, it just takes a tiny little bit of money away from you. But if the market just keeps popping back and forth like this, it doesn't do any good to keep jumping in and out, in and out, in and out, because it's just going to whipsaw you to death, right? You're just going to die a slow death. So that's why you look at different time frames. You look at the 1 minute chart and you say, well, it looks like we're kind of petering out down here. We're at a very important area. This low here is trying to break below the low, and it's not able to do it. It's kind of bouncing back and forth across that low. It's got to break hard and go and stay below it. And if it doesn't, I'm just going to immediately get right back out. So you can look at that. Then this is the range 50. So it's a little bit longer. You can see it started to die here. Look at this little choppy stuff. Choppy stuff is usually the counter trend. So that's weird that this is kind of choppy when it looks like it's the trend, but that's what it is. All right, so this is our limit order that got automatically dropped in there at $500. So if it'll keep going down, we'll make $500 at that point. But it's going to come back and pop us out again on our little stop. Maybe not. There it goes. There it goes. Come on, baby. Rock and roll. Let's bring that full screen so you can see it. That's kind of fun. All right, here we go. We just need it to come to that little blue line right there. That's $500, just a $500 target. See if it'll go down there. If it won't, it'll come back up. Little yellow dot. See how it moved that much? It jumped a lot. It went from little tiny moves to a big jump. It's like it does that. It's calculated so that it'll move and lock in profit as the market falls in your favor. But it stays back far enough that it doesn't try just not to pinch you out if you're wrong. But we got pretty good. Well, there you go. We got stopped out. We got all of our money back, so now we're back to $5 profit at least. Let's see our closed positions. We were down 160, 155. Now we're at 160. We're up $5. That helped pay some of the commissions and fees. All right, so now we're getting a little bump here. And notice that there's one up for every down. We got a down, we got an up. We got a down, we got an up. We got a down, we got an up. So what do you get after an up? You get a down. So what we can do is we can trail those little yellow dots again, and we can trail them until it turns around and comes back down and gives us another down. So the way you do that is you just click a little button like that that's already pre-programmed to do that. And you can set that up to do whatever you want. That's just called a little algorithm. And we're going to just carry it around until, oh, look at that. Came down and touched it. Now, is it going to continue to fall, or is it going to turn around and go up and stop us out? Who knows? Nobody knows. It's just going to do its thing. So we want to see it continue to fall. That's what it did over here. It just fell, fell, fell. Here it just fell, fell, fell. It'd be nice to do another one of these long things, wouldn't it? That would be a nice move for us. If it come in, let's see, from here, if it just went in on that yellow dot to where it got out here, that would have been a $380 move. So the market's not really moving that much right now. It's pretty quiet. $380 for the NASDAQ's a relatively small move. So it's pretty quiet, just doing a little snaky drift down. And come back, wants to stop us out. That thing didn't jump to the, trail 1.1 bars back behind the, I wonder why that didn't move. Did I have it set to trail, edit, trail price bars back 1, trail until break even? I don't have that turned on. Oh, we got in and it never did have a down bar. So it'll jump right here if this one will close lower. As soon as we got in, it started having higher highs. So it just sat there. Oh, another higher high. We might just get stopped out right here. Come on, little market. Go down. No, it says I want to go up. Okay, what do we want to do? Take our chance? Just get out. I don't know what it's doing. Now watch, that's when it'll flush on me. Oh, there it goes. If it goes back up, we can get in on along across that green and go for a little ABC to the upside. See, this little land, quit drawing and trade. The little ABC. I'm sorry. Here we go. Maybe we'll go to the long side this time. Probably just die. This thing's dead. Come on, you dead market. Come on, dead market. These look like nice moves, but they're actually very small moves. Hardly even able to get our stop to break even before it turns around and comes back around on us. Here we go. Now we're getting a little action. Turn off that auto scale. Okay, there we go. Hit it. Oh, look how close it got to our $500. There you go. Hit it, you rotten little dog. Hit it. Touch it. It's candy. Yeah, there we go. All right, take us off. How much do we make now? Now we're up $435. All right, that's pretty fun. Let's come over here and look at a different market. That was NASDAQ. Let's go look at day trade one with the NASDAQ and the S&P. So we just looked at the NASDAQ. Let's go look at the S&P. So we can bring the S&P in here. Oh, that's the day. That's the range. Oh, that's range 25 to S&P. S&P's moving. Look at that. It's slower than the NASDAQ by a long ways. That's tired. Look how tired that market is. Let's go to our other portfolio, Dow. So there's Dow. That NASDAQ really rocks and takes off and goes places. Look, this is obviously in a downtrend. One up for every down. Long down, short up, long down, short up, long down. Now we got 3 long downs in a row. We should start getting a little bit of a move here and then some longs ups here. We should get a little retracement here. See what happens. See how good of a predictor we are. Can you guys guess the markets? That's what we're here for, right? Trying to guess the markets best we can. All right, here we go. So once you get 3 downs, you generally get, your little ABC and then 3 ups. So we'll see if it'll turn around. Little indicator down here says we're turning. Little MACD says we're turning. Moving a little slower. This is a Russell. Not as exciting as the NASDAQ. Come on, little Russell. You want to slow things down. And it's not as big a market either. So you're not making and losing as much money either. Heiken Ashi bars rock. I think so. I think they do. The NASDAQ is for adrenaline junkies. That's for sure, isn't it? You are exactly right, Ed. That's why I like to do it on the micro. Remember, I was saying I like to do the NASDAQ on the micro. We can do this. Watch. We can go new. We'll go NASDAQ. And then we'll just put in here micro. All right. So we'll make a micro NASDAQ. And then we'll come in here and we'll go to micro NASDAQ. Where is the NASDAQ? NNN. There it is. Micro. So we get the micro NASDAQ. We trade the little one. Okay. So now we go in here to the, let's see, let's put a range 1 on there. 1 minute. Let's put a range 25 and let's put a range 50. All right. So now we're on the NASDAQ, but we're on the NASDAQ micro. It's 10 times smaller, Ed. Do you ever trade this one? Come on, load up. Load me up. Let's go back to here. Okay, so here we go. Now, watch this. This is really fun. Look at this little snaky thing going back up. Snaky, snaky, snaky. How many little mountains do we have in here? We got 1 mountain. We got 2 mountains. We got 3 mountains. We're working on mountain number 4. That's pretty crazy to get mountain number 4. Don't generally oftentimes get mountain 4, but there it is. But look how flat this market is. You stretch it like that, it makes it look like it's bigger, but it ain't that big. This is like a flat market. That's how this market really is. It's like this. It's just barely snaking higher. This is a little slow market. And we can take the reversal there. Here, we'll give it a shot. All right. Now notice that we're trading tiny. Oh, look, we just lost $6, not 60. Come on. There we go. Try it again. Come on, baby. So that's instead of $500 target, we're doing the exact same thing. The only difference is now it's a $50 target. Oh, we got stopped out again. This thing's not moving. It's starting to go sideways. Good thing we're on the micro. We got hit twice. We try it again. Is it going to fall? There's our arrow. Got an arrow this time. Come on, little micro. Come on, little micro. No, it says we're just going to dance sideways here for a minute, land. Ain't going to go nowhere. Do you think it's going to go down? I think it's going to go down. We got four little mountains. Right up across there. At least come down and touch the little line. It could be nice if you broke it right now. It's not going anywhere, is it? It's not going anywhere. Got a very quiet market. We had one nice little move, got us up to over $400. Come on, come on. If it would go all the way down there and touch that candy right there, that'd be like a $500 move in this market, in the big one. This is a little one, though. So we're just giving back dollars and pennies. That's okay. Once you get your money, play the smaller market. Okay, let's try again. This time we'll go long. You're going to try and make another mountain? Another little mountain? That's really weird. Here, another little mountain in play right there. Nope, too small. Not going to go. Broke the lights again. Ugh, it's a dead market. Those are on the ATR. Let me show you the ATR. ATR is like this in track and trade. And if you hit the defaults, TNT defaults, then it goes to 20 and 2.0. And they try to catch longer term trends. But since I'm scalping, I like to turn that way down. So this is 1. And I bring this way down. And usually I started off at 1 and 1. So right there, 1 and 1, like that. And that works pretty good. You got these little arrows. Of course, the market's pretty quiet right now. Pretty quiet. See, and those little dots in there, they're just not going anywhere. But that's just the average true range, and they trail behind the markets up and down. I start them at 101 when we're doing this little scalping stuff. And then I'll go smaller. If the market's really, starting to pump and move, I can lower that number and it tightens up my stop. Or I can raise it out and it loosens up my stop. And then so what I've got is I got this set right now. We'll just put it at 1-to-1 right now. Let's bring it a little tighter. Let's go to 8. And then we go over here to the trading tab. And here, these are little programmable buttons. So I can come in here like number 2, for example, would be number 1 and number 2 are good ones. Or you can use number 3 and number 4. But I'll show you just off this one. This is the buy. You right click on it and you go to QOCO1. This is the 777 strategy. So that's the setup for it. And so what we're doing, this is just a title up here. All that is the title. So you can write whatever you want in there. But what we're going to do is we're going to have this little drop down in here. And this is what this button will do. You just make this button do whatever you want. So you program in this button. So this is a buy, and we're going to set our stop at 100 ticks and our limit at 100 ticks. And then we're going to have it trail on the ATR. So it just trails automatically. So it puts the limit out there at 100 and then drops the stop at 100, but it immediately jumps to the ATR if the ATR is available. If it's not available, it'll just sit there and wait until it is. Then it'll jump. All right. So that's all that's doing. It's very simple, very easy, but it just does it for you. So if you get a clean ATR right here, which it's not right now, wait, there we go. You can hit that button. It automatically gets you into the market with a market order and then jumps that ATR right up to that little dot that we created. And then this just sets it. And you can grab this and move it anytime. You can grab it and pull it out. You can put it wherever you want. It just drops it wherever you told it, which was 100. Yeah, it's pretty good. I like it. I like it. It's good stuff, man. Good stuff. That's how these buttons work. So I had them yellow right now. The default's purple. So it's moving a little bit. There we go. We're making a little bit of money here. 30. This is 45. Let's put it right at $50. That's $500 on the big one. See if it'll go up. Oh, we got stopped out. How much we make? We're playing a little. We made $16, but we lost 11, lost 50 cents, lost 750, lost 13, lost 8, sitting there goofing off on that stupid little sideways trend. Market didn't move much for us. I think the ATR is a little bit tight right now because the market's just not really moving. And look at all the bottoming tails. They're not flat bottoms. We need flat bottoms. We like flat bottoms, like flat bottom girls. Okay, come in here with the ATR, and we're going to raise that up just a little bit. We'll go up to 1. In fact, that even looks, wow, 1 on this lousy market even looks too tight. 1-to-1, 1-to-2. We'll go 1-to-1. Yeah, we'll go 1-to-2. This is the mini. We're man, you're missing your opportunity to take a short position. Well, not really. If it's going to go down, we'll look for a little ABC, and then we'll take the next one down. If it's going to go up, it's going to go up, and it's going to do this, and then it'll go up again. We'll look for the long position. So this is just the first break. Don't get all excited on me. Don't get all excited. Trade. Okay, let's go. If it breaks that, we'll go long one more time right here. There we go. We'll take it. We'll take it early. There it is. Okay, now let's see if it continues the long uptrend. Come on, baby. You can do it. Go up and give me another $50. 50, 50, 50. Come on. Now, if you want, you can just grab this. I don't think it's going to go. You can put it down there. Oh, we're too slow. If we try to move the stop up underneath it, there we got it. Yeah, $16.50 again. You can put it in again. You can say, well, it might go again. You just drop it in there again, just like that. And then you can bring this down and say, I don't think I want to try and go that far. You just scalp a little out. Scalp and trail, scalp and trail. There you go. Well, we picked up another 1150. All right. So that's how you do this one. Okay. Let's get rid of these drawing tools. Another little nice trend right up underneath, but the problem is it's not very clean, not very smooth. We like clean, smooth moves. Look at how clean and smooth it was back here. Look at these beautiful, nice little trend. They weren't very long, but they were nice and smooth and easy to trade. Look at the difference between these and what was going on here and what's going on now. That's ugly. Ooh, this is ugly. Don't trade this. When it's like this, don't trade these. These are ugly. These are hard to trade. You want to trade when it's doing this. Smooth, beautiful, nice, natural, long trends like that. Those are nice. These, not so nice. All right. So let's come in here. Where are we at? Okay. Are we going to get another little blow off? So you get a little down, a little up, and then like that. Now, sometimes it does this. It comes down, does a little up, a little down, a little up, and then it'll drop like that. Those are common too. So we'll see. We could get in long right here, but I think we're kind of exhausting ourselves out. How many of these have we had? Way more mountains than it deserves. Okay, we're going to pop the short one right here. Now let's see if it'll continue. Break this low right here. Come on, you can do it, baby. Break that low. Come on, come on. Come down to the candy. Come on, right here. Look, right here. Look, right here. Candy, candy, right there. Come on, come and get it. Come and get it. Come on, little mouse. Here's the cheese right here. All right. It's going to go out and stop us out. There we go. That sucks. Lost $12. I was going to say, if this market's slow, I can tell you all the others are way slower. That's the micro. We can put these all on the screen at once, right? We can do that. This one, we got to bring full screen to turn on Heikin-Ashi. 1 minute. This is the 1 minute up here. Trade on a longer term time frame. Smooths things out a little bit. If we're going to do minute charts, I like to go to the 2 minute chart. Yeah, see, 2 minute chart's a little bit cleaner. Got chewed up. We'd have got chewed up right in here, wouldn't we? This was an ugly little thing. Would have come trying to trade in that. Let's see what happens right here. These are 2 minute charts. Let's bring this up here. Range, here's the 2 minute right here. I bring this down so it's easier to see. Oh, could you guys see that? Oh, it was all in the way. I was in the way. Let me get out of the way. There we go. I'll come over here. All right. Well, we've done okay. We're up $425, but could do better. Our goal is $500. We hit $500 in Power Hour. We're very happy. $500 a day keeps the doctor away. All right. That's the range 50. It's breaking higher. This is still breaking. Look, we're coming right down here to that 50. Is that the moving average? That's a 50 moving average. See if it respects that at all. Look at how nasty it is on the 25, though. This is all micro stuff over here. So look how nasty the range 25 is. There, it's trying to break higher. You want to put one on it? You can. Just pop one in there just like that. Yeah, I wouldn't. I wouldn't if I were you. I wouldn't try and trade this. This is really ugly on the range 25. See that? Look at how ugly that is. Not happy. Not happy with it at all. It's not going to trend. We're down to $385. We're just chewing ourselves into a hole. Come on. Let's go see something else. NASDAQ. We'll just save this NASDAQ just like that. Come over here and we'll look at, that's the micro. Let's go look at the Dow and the Russell. Let's go see what the Dow's doing. That's the Dow 1 minute right there. This is the Russell. This is the Russell. Daily Russell 1 minute. It looks like it's trying to fall. Trade. Nice little move. That's a natural trend line break, isn't it? Delete all drawing tools. Look at this. Nice little. So you go down, up, down, up. Is it going to make a whole retracement back down to down here? Or is it just going to make a little tiny move down and then go back up again? It looks like from here, this is the daily. Well, that's a daily chart. You can't really tell anything from that. Not on this little time frame against the 1 minute. See, if we go in a little early, that's early. It's because the yellow dot hasn't flipped to the other side yet. If you go in early, then it might turn around and go back up, and then you got this big losses on in here. So you got to be careful. If you try to move it yourself, so you go like, hey, wait a second, I'm in control of this. Do you want to take over or do you want me to do it? Oh, sorry. You do it. Or you could say yes, and then you take over and you do it, but then it's not going to do it. But then you have to tell it to do it again. That's even better, right? $500 a day keeps the 9 to 5 away. I'm going to start using that. I stole it from you, Ed. Now we'll make it famous. Come on. Should we bring this full screen? Boom, just like that. We're full screen. All right. Is it going to flush? Or is it going to sit there and dink around like the NASDAQ was? If we lose this one, we're going to go have our Sunday school lesson. If we get stopped out, time for Sunday school lesson. So stick around for the Sunday school lesson. If we don't get stopped out, then we'll trade again. But if we get stopped out, we're going to call it quits. We're going to take our $384 and run away, and go do our Sunday school lesson. Come on, you rotten dog. Fall. When do you use yellow lights versus blue lights? I use yellow lights when I'm trying to trade. I use the blue lights because they are tuned in to the BlackRock Aladdin algorithm. So if you want to follow the algorithm trading, you use the blue lights. If you want to just scalp trail, I like to use the yellow dots because I can make the scalp trails a lot more aggressive. So you can turn on the blue lights chart, bulls and bears. There you go. See, it's a little bit further away. It goes for a longer term trend, but I usually use those for counting my Elliott waves and my Fibonacci sequences. When I'm just doing this, scalp and trail, I don't use it. I just like to use the ATR and then I just count the waves and it's one up for every down. So I just go one up, one down, one up, one down, one up, one down, one up, one down. And I just, the thing is you don't know how long the ups and downs are going to go or how big each move is. So you got to be really careful, but you kind of anticipate how far the drive 1, drive 2, drive 3, and then you get a big retracement, a little ABC pattern. And you just kind of go off of pattern recognition here and you try and, anticipate an ABC 1, 2, 3 little pattern like this. Is it going to continue down and break here and go higher, or is it going to, go to a Fibonacci retracement? I call it decision point trading because it gets into a decision point and you don't know which way it's going to go. You got to make a decision, but you wait until it gets to decision points. What are decision points? These areas right here. These are your decision points, right? So your decision points, and if the decision points start coming in too close, you got to be careful because you don't want decision points coming in fast like that. That's where you get beat up too much, lose too much money. But when the decision points are far apart like that, then you can trade and usually make a little bit. And so I call it decision point trading, but when we're at this level, we're really just looking for one up for every down. So we just look for the down, the up, the down, the up. And then our job as traders, try and determine when we're going to have long ups and longs downs. And, we don't always know, but you try. And if you get whacked a couple of times, market's too choppy. It's not just moving nice and smoothly through its decision points. It's just a carnival game. Everybody tries to make it more than what it is. Oh, if you just do this one thing, you'll be rich, rich, rich beyond your wildest dreams. It's all a bunch of bullshit. You just come in here and you just do the best you can, and you practice your one ups for every downs on these bars, and then the size of the bars, the length of the bars determines. This is the 1 minute chart, so market's going to move a little slower. If you like range bar charts, if you like Heikin-Ashi bars, it's just how do you want to set up your carnival game? There's lots of tents along the fairway of the carnival game, and you just set it up the way you want and the way you like. I show you how I like to do it. I'm not telling you how to do it. I'm just telling you what I like to do. And it's just fun. And you come in here, and if you make a little bit of money, you're happy. If you lose a little bit of money, you're sad. But it's just a carnival game. And for me, the name of the game is to don't overtrade. Don't overtrade. Just be real careful. Wait until the market really starts showing some good decision points, and then take one. See if it works for you. You can watch your indicators. You get overbought, oversold. There's tools that'll kind of help you make decisions on which way you think the market's going to go. See, it looks like it's going to go down. We're in an oversold region up in here, but it's been trying to come down. You got a little arrow in there across the average true range, but it's being so slow and dead right now. You just have to kind of throw your dart at the balloon and hope you hit it. That's more often than not. That's really, people try to make it more than it is. It is what it is. It's a carnival game. And if you get good at the carnival game, you can make money at it. But oftentimes it's not the fault of it's not your fault as the trader. You're like, sometimes I make money at this really easily, and sometimes I lose all my money. Why? What's wrong with me? Why aren't my setups working? It's not you. It's the market. So the part that is you is trading when you shouldn't be, not recognizing the fact that it's not a good point, not a good time to trade. And then you trade anyway. Well, I got to make money. I'm here. I sat down. I got to make money. I got to trade. So that's the worst thing you can do, is say, I got to trade because I'm sitting in the chair. That doesn't mean that the market's going to move. So that's why you try and, that's why I like to do top of the hour type stuff. I like to come in at the top of the hour because the market usually has a tendency to move a little bit better around the top of the hour, the first, 5 minutes before the top of the hour, or 5 to 10, 15 minutes after the top of the hour. And then I notice when the market gets down to the bottom of the hour, it slows way down. And even on going from 6 o'clock to 6 to 9, that's usually a real shitty time to be trying to trade. Market doesn't move around in there. And then it kind of picks back up around at the 11 point on the hour, and then goes good till 3. So from 11 to 3 is kind of the good zone. And then of course we have power hour, which is the last hour of the day, and it's supposed to be good, but oftentimes it's just, it is what it is. The market's, when people decide they want to trade, the more people you can get in there and move the market around, that's what you need. People take days off, after a 3-day weekend, the next day after a 3-day weekend, that's usually a good day to trade, because people have been not trading for 3 days. And remember, everybody who trades, we're like a bunch of addicts. We're like gambling addicts. We're like, go to AA meetings, right? We should go to AA for gambling. That's really, day traders are addicted to this stuff. So they have to come and trade. It's like they have to get their fix. So anytime there's a gap in trading days, like when you have to take a day off, you're forced to take a day off, they want to come back. So the day after is usually always a good day. Markets will move. What you don't want to get caught in is you don't want to get caught in when a quant system or a large, what do they call them? The market makers, market managers, fund managers, those types of guys managing lots of money. They don't generally trade like what we're doing. They don't come in here and buy and sell, and they don't do that. This is all retail stuff that's going on here. What they do is they come in and they say, oh, I just got an order. I need to buy, 10,000 shares of the S&P or whatever. So they come in and they go, okay. And the market's dead like this. And then suddenly these guys come in and they say, I got to have so many shares. And then the market goes like that. And then they got their shares, and then they walk away, and then the market starts to go sideways again. We see that as retail traders. We see that big move, and we're like, oh, we're so excited. Oh, the market's going to trade. And so we jump in and start trying to trade after that big old move. And that big old move was just one purchase by some hedge fund or something. And then the market dies, and we sit there trying to go in on all these little, that's where we lose all our money. It's like, I don't trade. I just watch trading videos. You got to get you a demo account. Go over to Track and Trade and get you a demo account. Here, look at this. Look at this. Look at me.
Okay, this is the software I use. It's called Track and Trade. They've got 2 versions, one for stocks, one for futures. This is the website, track, the letter N, trade.com. This is where you download a free 2-week trial. No credit card required. Okay, go download your copy, then come back here, follow along, and I'll show you all my settings.
All right, there you go. How's that? Okay, look at this. We're up $175. Market's going to close in 2 minutes. Let's just go ahead and we'll hit exit chart. We'll take that money off at the 61.8 level. We're up $494. Oh, $6 shy of $500. That's all right. All right, let's go do our Sunday school lesson. All right, I have a Sunday school lesson for you very quickly here. Wait a second. All right, what is the commodities futures market? Commodities and futures market is where the country primary food, energy, metals, and financial indexes are traded. They're out of Chicago. All it takes is a different piece of software. You want to trade in New York, you use the stocks version. You want to trade out of Chicago, you use the futures version. 2 different markets. All right, this is your Sunday school lesson. Stocks and options out of New York. You have pattern day trading rules. When you do day trading, you have to have a minimum of $25,000 in your account. If you go 1 penny below $25,000 and you try to make more than 4 trades per week, they lock you out for 90 days. They freeze you out. That sucks. Don't want that. All right. So you got to have at least like $30,000. So you have that $5,000 buffer, and then you can make as many day trades as you want. All right. And then you have short restrictions. You have to pay interest and dividends. And if you actually have a short position when they pay their dividends, you have to pay the dividends. How would you like that? No, not for you. All right, come over to the last bastion of true capitalism on earth today, which happens to be the futures market out of Chicago. That's where the Bulls and the Bears are. All right, the Bulls and the Bears, and I mean the football team and the basketball team. You thought I meant the market, didn't you? But the Bulls and Bears are out of Chicago. So that's why we have no pattern day trading rules. You can open up an account with as little as $2,500 and trade those micros like I showed you today. You got no limit to how many times you can trade. No 90-day pattern day trading rules. No pattern day trading rules over in Chicago at all. No short restrictions, no interest, and no dividends. That's why we love them. All right. So you can start very small. You have everything is on a margin account. So you have to take that into consideration. But the way that works, if I can get this off of here and this back on here, you can come over here to the little key. All right. Oh, let me blow this up again. So you come over to the little key and it'll show you how much money you have to spend to trade this. So this is a 1-minute chart on the mini. So this is not the micro, this is a mini. And for day trading, you have to have $614 to make one trade. That's one contract, $614. That's it. You don't have to have no like $25,000 to get into these markets. You can get in and trade them with $600. Let's go over to the Dow. Let's go down to the Dow. We'll go to the 1 minute on the Dow, go into the key, go into the day margin. Day margin, $786. Uh-oh. What the heck is going on here? Oh, all kinds of crazy things. I don't know if I just lost you or if I'm still playing. I just lost me over here. Oh, there you are. You're back. Hopefully you're back. Oh, wow. Look at that market. It's dropping like a rock. We should have kept our position in there. We'd be up $500. All right. So now we come in here and then we go back to our little lesson here. And so that, got to get back out of the way. I guess I'm in the way either way. All right. So there we go. Chicago, no pattern day trading rules. New York, pattern day trading rules. Top of the hour. I was mentioning this earlier. Chicago Futures Exchange trade 23 hours a day. New York Stock Exchange trades approximately 7 hours a day. So if you want to trade 23 hours a day, that's pretty cool, right? You can come over and do that over here in the futures market. And there's no pre-market or post-market session. You can come in and you can trade 23 hours a day. Use your stops, use your limits, use your market orders, all at any time of the day you want. There's none of that restriction like you have in the pre-market and post-market sections in the stock market. True capitalism, last bastion of true capitalism on earth today. Now, this just goes through and shows you this is the 23-hour market. We have to close it for 1 hour a week because we need to do our mark to the market. All right, we have to do our accounting. That's what that is. So we close it for an hour. That's why it's not a 24-hour market. It's a 23-hour market. We close it for an hour, and then we do our counting, and then we turn it back on again. Turn those machines back on. All right? And then you have the difference here is just the difference between the mini and the micro. So the mini, you can see this move on the mini is $650. The same move on the micro account is $129. So as you can see, it's 10 times smaller. So that's your leverage. And that's just your quick little Sunday school lesson, the difference between the stock market and the futures market, why you might want to trade one versus the other. And it's up to you. I like to day trade the stock market too. It's a lot of fun. So I'm not saying you shouldn't do that. You can have fun doing that one too. But again, remember, it's just all one big carnival game. And there's lots of different ways to do it. But really, just keep it simple. All right. The simplest strategies are the best. Trend breaking, just looking for one up for every down. There's one up for every down, and just see how far that market's going to go. Once it breaks, get in. And if you're wrong, get right back out. That idea of staying in there and saying, well, I'm just going to sit on it until it comes back. The market can stay irrational longer than you can stay liquid. And that's your Sunday school lesson for the day. The market can stay irrational longer than you can stay liquid. So that's why we say cut your losers short and let your winners run. All right, guys, that's it. That's all I got for you today. And I'm going to close with this little message for you right here. If I can find it. There it is. Let's close with this little message, and we'll see you guys tomorrow morning, bright and early at 8 a.m.
All right, that wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pitt News Magazine.
Oh yeah, definitely subscribe to Pitt News Magazine. You'll thank us later.